Hello, everyone. Welcome to Chainlink Live. I'm here with Mindao Yang from dForce. My name is Andy Boyan from Chainlink Labs, and we're going to be talking today about DeFi and the dForce platform. We'll get started here in just a few minutes properly as people come on into this live stream. Glad to have everybody here. For me, it's morning. Mindao, I'm not sure what time it is where you are. Your background says San Francisco. Where are you from? Where are you broadcasting from? I should say.
So actually, it's about evening time now.
Evening for you, morning for me. Who knows where for our audience? It's part of the fun of a global conversation. So again, people who are just coming in, my name is Andy Boyan from Chainlink Labs, and I have Mindao Yang with me from dForce. We're going to be talking about dForce's DeFi platform, their recent integration with Chainlink, price feeds, oracles, and a few other things on their roadmap. He's got a lot of really cool things to talk about today. So why don't we get started? Mindao, tell us a little bit about yourself. How did you get started in the space? Like, what's your background? What got you interested in this sort of thing?
Yeah, sure. So first of all, I'm very happy to be here today. Actually, this is my first sort of AMA in the Chainlink community, and joining with Andy for this event. I actually been in crypto for very early. 2013. I first at the time I was trading Bitcoin mainly, doing a lot of arbitrage, and then in 2014. I invested in Ethereum ICO, and then subsequently invested in a number of other DeFi projects and also public blockchain projects. And my background actually from traditional finance. I was mainly engaged in private equity, distressed, direct investment. So basically all cover traditional finance investment when I was doing crypto. And then I went fully in crypto in 2017. And at the time, it's mainly on the investment side that we invested in Filecoin, Cosmos, and a number of other projects. And then in late 2018, I founded dForce. We are actually the very first sort of DeFi project coming out from China. At the time, there's only a few sort of DeFi protocols in the West as well. And luckily, we invested and backed by China Merchants Bank International, which is the fifth largest commercial bank in China. And I think that we probably the only sort of DeFi protocol that invested by a commercial bank. And then earlier last year, we invested by Multicoin and also Hobby Capital. And we launched our first protocol actually in July 2019. It's a stablecoin protocol. So we actually started as a stablecoin protocol, and then we expanded to lending and trading. I think that, for the audience that are familiar with some of the counterpart DeFi protocols in the West, I think what really distinguished dForce from the other protocol is that we actually designed very early on to do a protocol matrix. So it's not like we just do lending or trading or asset. We want to be horizontally and vertically do several core protocols. So now you look at our protocol matrix, we have our yield markets, which is very easy for people to deposit stablecoin into the protocol and then earn secure and high yields. And actually the capital in the yield market will be supplied to our lending protocol. So it's all integrated. And I think that that's also what is going to be the trend in DeFi is that, protocols will integrate with third-party protocols or integrate with some of the in-house protocols. And that's the way to achieve the maximum capital efficiency and performance as well. So yeah, I would like to share more about what we're doing and the products as some part of the later conversation. Yeah.
Yeah, absolutely. That's really interesting. The idea of horizontal integration. That's the success of APIs in fintech has been a lot about that, where you can just do a lot of different products in one platform. Even if you don't make them yourself, you can bring them in. And certainly Ethereum and blockchain composability lends itself to that model. Yeah. So again, welcome everyone. If you just tuned in, I'm here with Mindao Yang from dForce. My name's Andy Boyan from Chainlink Labs. We're talking about dForce. It's a very broad DeFi platform that does lending, it does synthetics, it does yield aggregation, it does a bunch of things. Why don't you walk us through some of the products and just let us know, like what sort of things are on there? What kind of yields are people looking at? What kind of synthetics? Those sorts of things.
Yeah. I think we have several protocols already been in the market for a while. We're talking about, for example, the yield markets. We already deploy on Ethereum mainnet and also Binance Smart Chain as well. And for the yield market, it's very simple. It actually catering to the users that's only interested in deposit stable coins or ETH or BTC to earn high yields. And it basically we deploy a set of strategies in the underlying protocols where the capital that deposit in the smart contract will be relent into lending protocols to earn high yields. And also we actually help you to mine some of the governance tokens in the background. For example, the stablecoin will be supplied, for example, to Compound, and it automatically mine comes and then sell into the stable coins and then put it back to the pool. So you will be able to very easy to earn a yield that is actually comprising of a governance token and stablecoin yields. So the users don't need to actually manage the process of interacting with the lending protocol. It's very I think it's also very gas effective as well. This is the asset protocol. And also we have our GOLDx, which is a gold token. I think this is also probably the only gold token that is compatible with the DeFi protocols. And now our lending protocol support GOLDx as collateral. So you can basically supply that into a market and borrow stable coins. At the same time, the gold token is actually generating a very good yield. It is about 16% APY at the moment. I think it's probably the only DeFi sort of yield gold token in the markets. And what is more fascinating is GOLDx is actually a wrapper of Paxos Gold. So anyone that own Paxos Gold, you can very easy to convert it and wrap it into GOLDx. And then deposit into our lending protocol to earn yields or use that as collateral to borrow stablecoins. And the reason we wrap Paxos Gold is because Paxos Gold have a very tricky design. They have a transaction fee for every sort of transaction. So in fact, it's a deflationary token. So basically make it very incompatible with all the existing protocols. That's why we wrap it into GOLDx, and then users can actually interact with the DeFi more easily without any trouble. So I think that's also the asset part.
Our Chainlink community is familiar with Paxos. They're a Chainlink user as well, so that is a familiar name brand. I was reading about your GOLDx token. Is it denominated differently than other gold tokens? Is it like one of them was in ounces, but not the GOLDx? It's
Exactly.
denominated differently somehow.
Yeah. So what is the so actually GOLDx is 100% comprised of Paxos Gold, right? The only difference is we get rid of the on-chain transaction fee, which is making it totally incompatible with DeFi protocol. That's why we get rid of it. And the other one, we denominate in gram. So I think that will be making it easier for some of the users to acquire a small quantum of gold. For example, they're interested in buying like 100,000 $1,000 US. They can do that in the small quantum. It's denominated in gram, but it's 100% backed by Paxos Gold. And as Andy has mentioned, I mean, Paxos Gold is one of the, I think probably the only highly regulated physical gold token in the markets. And it is regulated by New York sort of financial services department. So I think it's a highly regulated gold token. And I think that bring a yield to gold, I think is a very attractive thing that we can do in DeFi, because and up to today, the majority of the TVL in DeFi is mainly crypto assets, which is highly correlated, right? When the market falls, everything just collapses. So I think we need more sort of uncorrelated asset in DeFi to make it more robust in terms of volatility. So I think the next step, we also would like to onboard more real asset into DeFi as well.
So is that why you guys are starting to move into synthetic assets soon? Is like to bring more of those real world assets in?
Yeah, I think that we look at the whole crypto space because I was from traditional finance background and look at an asset class. Crypto as a whole is about $2 trillion US asset, and it's rather small comparing with some of the major assets like real estate, fixed income, or maybe equity. But I think that in order for DeFi as a whole to actually break through the glass ceiling of the so-called asset bottlenecks, I think it's very important that we onboard more assets. And of course, there will be like hundred or thousands times more real asset comparing with the crypto. And that's why we do synthetic asset protocol, where we can actually basically can mirror any asset that has a price oracle, for example, a price feed that provided by oracle like Chainlink, right? For a gold, silver, Tesla stocks, Amazon, anything that has a price feed that feed by the Oracle. Yeah.
Yeah, we're starting to see a fair amount more interest in that. I see it over the space as people are just trying to figure out different ways. How do you get these real world assets onto the blockchain? How do you represent those fairly? Fascinating conversation. If we have people who just joined, my name is Andy Boyan from Chainlink Labs. I'm talking to Mindao Yang from dForce. We're talking about their DeFi platform. It came together. Sounds like it was inspired from your background in traditional finance and some fintech in China, and then launched in 2019 with a couple of products, and now has a variety of products with more on the roadmap as well. If you're listening in or watching and you've got questions, feel free to drop them in the chat, guys. I'm monitoring the YouTube, so I will keep an eye out there. But if there are not, then I will keep asking my questions too. One moment, I've lost my doc. Can you talk a little bit about, I read you were talking a bit about how Chinese users differ in DeFi from what they prefer from Western users. Is that still the case? Do you still see that happening in terms of like integrated products versus going site to site to site for yield aggregator and lending and these different products?
I think that the users definitely is very, very different in China comparing with some of the Western markets. For example, now everybody knows that in China, the DeFi is actually attracting a lot of retail users. Actually, not from Ethereum blockchain. It's from Binance Smart Chain, Hacko, which is a hobby exchange chain. The reason for that is very simple, because it's much cheaper to use these applications, on these platforms, right? I think it's like maybe for Binance Smart Chain, it's like 1% of the gas fee comparing with Ethereum, or several hundred times, gas fee savings. And Hacko is even more dramatic. I think it's like 0.1% of the gas fee comparing with Ethereum. So there's a lot of retail users, because they're very price sensitive. So actually they intend to use a lot of these exchange chain applications. And that's why we see a lot of DeFi protocols that, who used to be, deployed on layer one, Ethereum layer one, now consider migrate to Binance Smart Chain, because I mean, that's where the users are. And actually the users also not really care too much about decentralization. And I think that's something that I think is very different perspective comparing with the developer or project team like us. We definitely care about decentralization, but I think the users, wherever they can get a better sort of transaction fee savings, they will go. And I think it's a positive thing for the whole DeFi, because for these retail users, they probably will never use DeFi if actually it was on layer one and cost like $50, $100 to use the transaction lending or yield markets, where they can try out everything, on Binance Smart Chain. So I think it's a very good way to onboarding this otherwise just impossible DeFi users, into the ecosystem. And when they get used to it, and when layer two solution is ready, and probably they will migrate to layer two and to use all these DeFi protocols. So I think that exchange has done a very good job educating all these CeFi users to use all these DeFi protocols. And I think it's fantastic. And you can see that all these infrastructures, including oracles, are also supporting multiple exchange blockchain and layer two as well. So I think this is a absolutely fascinating thing, because otherwise these users would just probably just use a centralized services. And now we have a lot of capital actually getting into the space exactly because there's so many of the retail users are using all these applications and not on Ethereum. I talked to quite a number of users in China. Their first experience when using DeFi is actually on Binance Smart Chain or Heco, not on Ethereum. I think we will see a lot of retail users that actually have the first time experiences on these low cost platforms. Yeah.
Yeah, I'm thinking back to 2017 and 18, going to conferences and hearing people talk about it's going to be a multi-chain world. We're going to, be interoperable, and we were ready for it then. Okay, let's see it in a month. And it, of course, it took much longer. But today, I mean, you can just go on your MetaMask wallet or whatever wallet you use and switch from Ethereum to Binance Smart Chain to Avalanche to, whatever. There's just a ton of options now.
Yeah.
You can really do it. It's pretty amazing, and that's got to help user onboarding to all the ecosystems, I would guess.
Yeah.
Yeah, fantastic. So you guys, dForce uses Chainlink oracles as well. Can you tell us a little bit how the Chainlink oracle integration works and how you guys rely on Chainlink?
Yeah, I think we actually we built one of the early version of Lightning protocol before, and at the time we're actually running our own oracle services, right? And we have the hard lesson, right? It's very difficult to build a oracle. Of course, if you actually look at a standalone basis, it's not that difficult, right? A standalone basis, but when you actually look at dForce, where we have asset protocol, trading, and lending. And also we not just on Ethereum and also Binance Smart Chain and maybe on Heco and maybe Layer 2, there will be a problem on scalability and reliability. I think for a team that actually build an Oracle service that can reliably scale up to supporting multiple protocols on multiple platforms, I think it's just impossible for a DeFi project. It's almost impossible, I could say. And that's why when we are researching third-party Oracle service in the markets, I think Chainlink stand out because one, I think that there is also big protocols already using Chainlink like Avi, Synthetics, and they are very heavily relying on Chainlink to explain beyond the platforms. And I think the log value is almost crossed more than 10 billion US dollars already. So I think that this is a very sort of I think it's a very good sort of vote of confidence on a third party oracle, because we've been talking to a number of them, including all these existing oracle services providers in the markets, and also I think that Chainlink is also very good at expanding beyond just Ethereum. And I think that's very critical because for the new DeFi protocols, particularly for those that require high frequency tradings or high frequency transactions, basically they can only deploy on, Binance Smart Chain, Heco, or some of the Layer 2 platforms. It's just impossible to actually use those products on Layer 1. And we need the infrastructure, particularly the Oracle infrastructure, to support these chains for us to make our lives easier. And I think that Chainlink probably is the only one that support so many of the other platforms. And of course, we intend to just use one because we can basically don't need to worry about scalability because we scale up beyond Ethereum. So I think that's I don't think that we have much choices because Chainlink already been providing all these reliable services for a long time, and I think that one a very positive sort of impression about Chainlink is I think they you guys are very responsive to the market demands, right? So if there's a new platform or new chain and emerging, and I think that you can consider to add support for that. And also when we're talking about synthetic assets, I talked to the team regarding our intention to offer like stocks and commodity as well, and you guys are very willing to provide those kind of services. And of course, cost is also a very good sort of consideration in the equation, because The gas fee on Ethereum is very expensive. And the upside for using a Chainlink is because you guys are already supporting providing services to multiple DeFi protocols. So I think from a gas cost perspective, it's also more effective. Yeah.
Again, from the fintech world, they play this out in terms of if you want to provide a good banking application, you'd make you want KYC, you have to understand your customer. You could build it yourself, but then you got to hire a team to build a KYC. You got to hire product designers. You got to do this, or you could port it in and get it from somebody else. You pay a fee, and that's the model. That's like how you build these out, is you specialize in services. And so, I mean, that's what the Chainlink protocol is. It's a specialized service that gets data into your smart contract, whether it's computational data or price data or whatever that happens to be.
I think that's the same kind of analogy when people asking that, do you guys want to build a blockchain for an application? I think the same kind of analogy, say, okay, we don't do that because we want to run a noodle franchise, right? We only want a noodle franchise. We don't want to build a police department, a government, and then build a military, right? And these are some of the infrastructures that you guys provided. And then we just build our noodle franchise and expand it, and maybe expand to coffee and the other things. I think that's exactly what DeFi protocol and like Lars are doing. We definitely would not like to just do infrastructure thing, because that would be like too heavy. Yeah.
Well, yeah, and so for small teams, especially teams like you want to pivot, you said Chainlink is responsive to the market, but all the DeFi apps have to be responsive as well. And so that's sort of why Chainlink engineers are trying to create these price feeds that work and demand to the market that serve real market needs, is because crypto moves real fast. If you want to build fast and you have a team of 10 people, I mean, what are they going to do? You're going to dedicate half the team to rebuild your Oracle infrastructure. It's just not financially feasible, and you can't train people in time to do that according to market demand. So, but you guys have been around for a while. One question I was thinking of when you were talking about your launch in 2019 was, did you start as only lending, or was it like always this big vision, domino effect, lending, yield, synthetics sort of thing? Is the early days of DeFi are just really interesting to me. How did that inspiration come?
We actually planned it out very early on. We do asset. We will first launch our stablecoin protocol, and then we do lending and then trading. So I think our protocol matrix strategy is very is very thought out early on. And the reason we start with asset is because we look at whole DeFi spectrums. Asset protocol is the most sticky one. They have the strongest network effects. You see all these crazy yield farmings, over the past year. Who get the most benefit in DeFi? It's MakerDAO, right? Everyone use DAI, everyone use USDT, everyone use USDC, and they didn't pay anything. They have no liquidity minings, right? And these asset protocols have no liquidity mining. They enjoy all the network effects and the network stickiness. That's why I think that's why we're looking at synthetic assets and stablecoin assets. Why we start from there? Because we believe that was where all this liquidity will go. You have to actually exist in the form of asset protocol, stablecoin or synthetic assets. And the second one is lending protocol, because lending is basically a very fundamental infrastructure in DeFi. The reason DeFi is so, the growth is so exponential is because in the first time in crypto, we actually have a interest rate yield markets where people don't need to actually look beyond crypto to find the opportunity to earn the capital, because they can deposit in the DeFi bank, earn yields. So basically, you don't need to rely on traditional finance for finding the yield or convert it into fiat and then sit in the bank to earn interest rate. So I think that the yield market and lending protocol is a milestone, is the most significant milestone in DeFi development, because in the first time, we don't need to move out to the traditional world to find yields. And that's why we do lending. And you can look at all the TVL chart on DeFi Pulse, the DBank. MakerDAO is the asset protocol. And second is Compound, is a lending protocol, RV, and also synthetics. So basically all these, why the TVL is so large, I think is absolutely for a very logical reason, because these are the fundamental money Lego. within the whole DeFi. So that's why we don't do all these the other fancy things. We just want to do a fundamental protocol, because I think it's very early on in DeFi. Just like for oracles, traditionally Oracle just providing a price feed for crypto assets. Now they aggressively extending to other real assets. I think the same thing. DeFi is still very early on. I think that we definitely need to focus on more fundamental piece of the DeFi Lego, and that's also where the most value will be captured. It definitely will be captured on asset protocol and on lending and trading as well. But trading is more competitive because you actually have a very strong competitor from the centralized exchange. They all have deep pocket money. So I think it will be a difficult, it's a very, very difficult race in DAX and AMM space. That's why we really not spend too much efforts on those. We just focus on asset and lending. I think it's easy to build competitive advantage in these two verticals.
Yeah, I mean, Yield Aggregator is the next product that combines those things, right? And so that again simplifies that process of using these really basic Legos. And somebody was asking me just recently, like, what is farming? Like, how do I start farming? And I started explaining, like, oh, you got to get LP tokens and you got to deposit them and you got to find the interest rate and then you got to put those in as collateral and withdraw this. And then I just said, just go to a yield aggregator, right? And they do that for you, essentially. Saves on gas. It does all of this together, and it really simplifies that process. I got a couple of questions from the chat. So we'll ask this one, and then I've got a couple of follow-up questions as well. So can you explain what is the use of the dForce token?
Okay, yeah. I think dForce token have several sort of utilities, and particularly because we are launching our synthetic asset protocol. So basically, what you can do, of course, governance is the most of common utility. You can use that to vote for all the risk parameters within our protocols, like collateral ratio, which asset to list, and what is the fee charges, interest rate reserve ratio, and all these financial parameters are governed by the token holders. In addition to that, I think one of the sort of we haven't announced our token economic 2.0 yet, but I think going forward you'll be able to use DF token to stake into the contracts, and then you can earn systematic yields. In addition to that, you can also use that to mint all the things that asset that we supported, like stable coins in US dollar, in Europe, and maybe in Chinese yuan or Japanese yen. And also you can use that to mint Tesla stocks, Apple stocks, gold, silver, etc. So it will become a product, productive assets. It's just not a passive asset. And the reason you mint that is because you can use that to provide liquidity on AMM, and you can earn trading fees, liquidity rewards. So there will be multiple rewards that will be accrued to the DF token holders. And of course, we have also interest rate reserve on the lending protocol that will be used to periodically purchase DF and then redistribute it to the stakers. So at the end of the day, we want to ensure that all the economic values and value captures will actually flow to our token holders. And that will be a very significant upgrade of our token economics in the coming sort of launch. Yeah.
Yeah. So thank you for that question. So one of the things you mentioned is, so you can use the token as collateral for synthetics, and you've got an upcoming platform. We talked a little bit about this before we started the live stream. Can you tell us a little bit, like, what does this synthetics protocol look like? Like, how does it add to your platform?
Yeah, I think we are. I think we are the only sort of protocol that doing building a synthetic asset or stablecoin protocol natively on a lending protocol. You look at MakerDAO. MakerDAO is actually a non-pool based lending protocol. So it's not very capital efficient, because everyone that want to mint DAI, you have to put in your collateral in a silo CDP and then mint DAI. So your collateral in the CDP cannot be reborrowed, right? There's no yield there. And also there's output scalability issue for DAI is that you can only mint US dollar stablecoin. They don't support Europe or the other things that asset. So I think they have very limited sort of outputs, even though they can actually use a lot of collaterals to do on the input side. And you look at the other one is synthetics, which is a very dominance of synthetic asset protocol. I think the issue with synthetic is that the majority of the collateral that you can use to mint things is SNX. It's basically 98% of the collateral is on is the platform token, and that created an issue because one is that the market cap of synthetics will have a huge constraint on the collateral that you can use to mint synthetic assets. There will be a natural sort of gas ceilings, even though they actually trying to remove that because now they support ETH and also the other assets as collateral. But I think that, as a matter of fact, 98% of the assets still on SNX, and they have a very high collateral ratio. Is 500 times, 5x of collateral ratio. So you can think of the capital efficiency is very, very low. And what we are doing differently is that we're basically supporting you to use all the lending protocol collateral to mint stablecoin and synthetic assets. And what is the upside of that? One is that because the lending protocol is a pool base, so basically all the collateral you put there is natively earning yield all the time, right? For example, you use USDC to mint XUSD, our stablecoin. USDC probably is earning like 10% yield, and then you mint a stablecoin, maybe just paying like 3% yield. So it's very easy for you to actually do a lot of yield arbitrage across the platform. And this is impossible, in MakerDAO because all the collaterals are in a single position. And also, it's very easy for us to scale up the input because we are not only supporting stable coins and also the other crypto assets. And also you can use the synthetic asset you just mint to put into the collateral pool and then to mint more assets. So I think it's inherently more scalable sort of platform that will be able to allow more natural arbitrage between general crypto assets and the synthetic assets. You look at all these synthetic asset platform now in the markets. I think they are very much isolated. They have their own ecosystem where it's very difficult for this closed ecosystem to communicate with the external world because they have their own system depth designs, or they have their you have to use their platform token to mint a synthetic assets. I think there's a lot of scalability issue for these synthetic protocols, and we want to do something differently to actually improve both the scalability on the input and also the output as well.
Yeah, I love to see slightly different takes on a variety of products and see what the market chooses, right? Different people have different risk profiles, different people, have different preferences. And so it's fantastic to see additional competitive offerings with different parameters that people can choose and evaluate for themselves. So as new, because the DeFi space is really pretty small still, it's still growing. And with this incredible growth that we've seen in the past year, still, the market is still so much bigger. You touched on this a little bit earlier. What are some of those challenges that new users are coming into DeFi facing? What, as an industry, do you think we need to focus on to make sure they stay, they try it and they stay? What's kind of like the top two goals in your perspective?
Yeah, I think that the most significant one, I think the first one is the regulatory. I think the second one is the entry barrier. The entry barrier is, I will talk the second one first. I think the entry barrier is still pretty high because as a typical user, that you have to remember seeds, passwords, and you have to use different wallets, and you have to actually, just interact with a bunch of protocols where you don't know where the money are going. So I think there's a very, I think the barrier is not just like, intellectual, right? It's more like psychological. I enter my money and it's go and boom, we go. Where is it going? I mean, I think it's not like a centralized exchange where you have a very high confidence that your money will be sitting in Coinbase and is secure. And they probably have insurance that can insure against some of the potential losses. So I think that the psychological barriers and also the user behavior barriers is still very high for DeFi. And I think that gradually those will change because you look at some of the wallets in China, they integrated very well with the DeFi protocol. So you can use those products quite seamlessly, just like you use some of the CFI products. It's very good. So UI UX comparing some with some of the other products. So I think that gradually will be will be greatly improved. And on the regulatory one, I think it's more difficult and long-term one, because we know that the regulator around the world is already catching up on the learning curve, right? They used to be like know nothing about DeFi, and now they actually paying a lot of attention on stablecoin regulation, and not just in the States. I think in China as well. So I think in the long term, this is a huge barrier for the new users to come into the market, because they don't know whether this is regulated or not, and they don't have a clear guidance interfacing with these protocols. I think that's a huge setback for some of the new users, particularly, there was a lot of scammy projects that actually use the name of DeFi to raise money and do all these kind of scammy high yield products. I think it's also I think that's it's the biggest challenge, I think, for the industry. I actually want to go to mainstream, onboarding more real assets. I think this is some of the hurdle we have to overcome in order to actually bring the DeFi to the mass.
I think it's almost the same problem. The retail users have it's an intellectual barrier of, I mean, you can be smart, but there's so much information you've got to process and go through and figure out, well, okay, what's a scam, what's not, what's an AMM, what's not, private keys, there's just a lot of information that if you've been in the space for a few years, it's becomes a second language. When you move that over to regulators, it's the same thing. It's like having regulators try to understand, and you see in places like Nigeria and India, just a ban, like, oh no, we're just going to ban it. And then they backpedal, and then there's mixed messages. And of course, governments, just like organizations, are made of many people and different, thing. So I think those are kind of similarly tied together, although one is a little bit more closely tied to user experience, and the other is on the regulatory side. Mindao, this has been a fantastic chat. I've enjoyed getting to know you and learning a lot about dForce in the past couple of days, and especially today. I did my reading yesterday as well, and previously. Where can our users follow your progress, ask more questions, and get to know your project a little bit better?
Yeah, I think that for the audience or users, in countries other than China, because in China we're quite visible, we have very robust WeChat communities. I think it's very easy to find us, or Weibo. And actually, for the global community, we definitely more active on Twitter. So just follow the dForce Network Twitter. And there was a lot of you'll be able to share or have the latest updates regarding the protocols. And also Telegram group as well. So we also have community managers managing those channels. And of course, if you're actually more tech savvy, you can go to the GitHub because we also have a lot of technical upgrades and protocol upgrades on GitHub as well. Yeah. And I think there will be a big launch by end of April on I think that asset protocols. So and also there will be a revamp of the token tokenomics. So I think that if actually anyone is interested, I think that you can keep an eye on our developments. Yeah.
Fantastic. So if you're new to DeFi and the community in general in crypto, go to these Discord channels, have conversations, meet people, ask questions, follow projects on Twitter, and come to YouTube AMAs and Q&As just like this. We appreciate that you came. You can find dForce at all of those locations, and we'll put them down in the show notes as well for later if you want to come back and find those. Of course, you can also join many of the Chainlink social media properties as well. We've got a technical Discord, the hackathon going right now, crazy activity. We've got our Telegram, our website, chain.link. And of course, you can like and subscribe to this channel. And we appreciate you coming today. Mindao, it's been a pleasure. Good luck to you.
Yeah, it's my pleasure as well, Andy. Thank you. Very good chat.
All right.